What's your take on the numbers?
So overall, I think it's consistent with that modestly firming trend that we're expecting to see in inflation. So we know inflation, especially the core, is slow moving around that underlying trend. And so we wouldn't expect to see a giant spike up, as you and David alluded to. But overall, we are beginning to see some of the cyclical pressures emerging. So if you look at the ISM surveys, for example, both are showing backlogs of orders at the highest levels that they've been over this expansion. The NFIB survey this morning showed prices increasing at the fastest pace. So we are beginning to see those cyclical pressures emerging that I think should make the Fed more confident that inflation is going to stay here at 2%. But as you guys indicate, it's not looking like we're going to see a spike higher that's going to force the Fed to significantly up the pace of tightening.
No, what's interesting, though, is we are seeing a little bit of sell-off all across the curve. Basically, you're looking at the biggest selling coming in the belly of the curve. What does that wind up telling you, especially when the 530 curve now falls to about 28 basis points and continues to flatten?
Well, I think what we're looking at is maybe the longer-term inflation expectations, or at least the medium-term kind of once we get past the more recent spike in energy prices that did look to be a small boost on the headline, that, still not terribly worried about the longer-term rate of inflation getting out of control.
So, Sarah, I'm really curious about the meeting that we'll hear the results of tomorrow with the Fed. They're going to announce their decision. And the big question is 3 versus 4 this year. How will the Fed decide that? What in these numbers might push it in one direction or the other?
Yeah, so I think we're in the camp of 4 hikes this year, and that's really coming from the fact that we have seen inflation pick up a little bit faster than what the Fed has been outlining. So we think core PCE can get up to 2% by the end of the year. The Fed's at 1.9, and we think it'll probably hit 1.9 when we get the May numbers for PCE. And so when we look at their expectations for inflation, we think that kind of tilts us towards 4. Also, when you factor in just how tight the labor market is. By many indicators, we're looking at the labor market as tight as it's been in 30 years. And so it does seem like more wage pressures are coming down the pike. Businesses don't necessarily they don't necessarily wait around to raise prices in that environment. They like to get out ahead of that. And so given the slow-moving effects of inflation, we do think that the Fed will want to get out ahead of that. Obviously, they'll be monitoring the risks, potentially specifically the global risks that have popped up again, trade tensions escalating, some concerns about emerging markets. But right now, we think they'll be focused on their primary domestic mandates of U.S. inflation and the labor market.